Hello, this is Cary with Wicked Signal. Today's video analysis on NIO Incorporated, symbol NIO, was recorded on Thursday, January 7th, 2020. I'm going to jump into the charts in a moment here, show you some stuff on NIO. If you don't know about NIO, you probably do, but it is sort of the Tesla of China. In a sense, it is a Chinese automobile manufacturer. They're headquartered in Shanghai, and they specialize in designing and developing electric vehicles. They've been around since 2014. They had their a New York Stock Exchange IPO in 2018, and this chart you're looking at right now goes back to the origins of the IPO in New York, back to 2018. Before I jump into NIO and what I see here, just once again, I want to encourage you to tell your trader investor friends to go to wickedsignal.com, click on the free subscription link at the top. Please have them fill out their first, last name, and email address, and they or you will receive an email each and every time a new video has been released, ready for viewing. A new analytical video is ready for viewing. I won't fill the inbox with all kinds of marketing sales pitches, and I do not share your personal contact information with anyone outside of the organization. So let's jump into the chart here. This is a weekly chart. I'll be showing you weekly bar chart throughout, really the same chart, just I zoom in certain areas. This is really the extent of the New York Stock Exchange activity going back to 2018. I can see the extremes here, and not really the extremes. You know, the 2018, the IPO high was $13.80. Roughly a year or so later, the 2019 low was $1.19, and you can see how in June of 2020, about 8 months ago or so, maybe a little longer than that, the market elicited a meaningful buy signal. Now, at that point in time, there was no way of really determining it would go onward and upward to where it's been, which is a 57.20 high from last November. But there you have it. That happens with these. With some of these high-tech stocks. And that was a channel top at that time that was at 672. Even there's no point in even looking at that formation really anymore. You can see the extremes for the last, since the November. November was a very active month, 57.20 high, 38.43 low, and we've been inside the November extremes ever since, for the last couple of months, last month and a half or so. I'm going to zoom in on this chart and just go over the last year and a half, 2 years or so, maybe the last year, I suppose, back to January of 2020. And, you can see here that there is a channel structure, a new channel, really. It's not been tested, and it is at 57.84 this week of Monday, January 4th, and it rises to 58.27 the week of Monday, February 1st. It is our ceiling, really. I'm going to say not only through January, but even into the later first quarter. Yes, it would constitute a new, move high if we tested that channel top, because the high was 57.20 in November. So we'd push through it by just a bit, which is sort of a classic move, new high, and then the market fails. So I think that is really our breakout resistance. As we look ahead into February, March of this year. Until then, this is a ceiling that can contain buying into the later first quarter. And from here, we could fall back into the mid-30s over the next few months. I'll show you that. There's no signal for that per se. It's just that when you test meaningful longer-term resistance in the 57, 58 handle, then meaningful support, which would basically be a channel bottom structure in the 36 area, and I'll show you that in a moment. Right now, very near term, we did settle, or it looks like we will settle this week. We pushed through this formation this week, which is at 50.46, and it rises 4 full weeks later to 52.62 the week of Monday, February 1st. And as usual, these numbers are all 4 weeks apart. I do that for a reason, so that you can subtract them out, divide by 4, and you'll know the location of these formations each and every week in between. And so the way I see this, yes, you have a bit of a buy signal that has developed above 50.46, and in hindsight, it may actually have sort of called the move. We could get follow through here now to the upside as we continue into the later first quarter. But if you want to be safe, if you want to be safer, I guess there's a couple of ways to play this. Of course, you could buy any dips into the $50 and then buy more with a settlement above 57.84, or you could just wait for a settlement above 57.84 to jump on for what I think would then be bullish continuation into the 70s. And so there's a couple things going on here. One is very simply an extreme point count of the November extremes that I showed you in a previous slide. So you have the November high against the November low. That's the AB, the full swing. And then you push through that channel top at 57.84. We should see a full 100% swing to the upside, which is a static level at 75.97. And all that is just subtracting the November low from the November high and adding it to the November high. 75.97 would be, I think, a realistic target. And you also have a nicely defined channel top that is based off that recent low from a couple of weeks ago. And so long as we don't look back, as long as we don't fall back and violate that trend line off of that recent low from a couple of weeks ago, that 71.42 to 79.08 channel top, which you can see at the top of the chart, remains valid, and those are the numbers. In other words, if we close above 57.84 or above 58.27 or wherever that formation is between now, the week of Monday the 4th of January, and the week of Monday the 2nd of February, if we close above that area, and I like to stress by a 1% margin, FYI, I think that's always a good approach. In other words, if we close at the end of this week, January 4th, at 57.90, is that a buy signal? Sure, but it's also susceptible to failure, to falling back on Monday's open, right back below that formation. So clearing it by a full 1%, which would be around 58 cents, above 57.84, which would be about, what would that be? 58.42, I think. 58.42. There you go. If we close above 58.42 at the end of this week, and I don't think the market has it in it, but it might. If we did, then 71.42 or that rising channel top becomes a realistic objective, and that should be realized within 2 to 3 weeks, 3 to 5 weeks, something like that. That would put us into late January, early February, and we could ride that up. It's actually all the way up to 79.08 the first week of February, and once again that formation intersects and for a while actually coincides with 75.97. So I think you could say 75.97 target, with a settlement above that 57.84 formation. Until then, that 57.84 formation, as I say, is one that can contain buying into February, and from there, once tested, the market then susceptible to falling back to support. And what is support? Well, if I'm just basing it off of these recent highs, and once again, this is a newly formed formation, so the high for this week so far is, what is the high so far this week? It is 55.27, and I believe that was placed on Thursday. So as long as that 55.27 high remains in effect, in other words, if we were to fall back over the next few days and the two highs that you see here that form the top of this channel top, if they remain in effect, then we have the 36.82 formation to the downside, drops to 35.54 the first week of February. Now, I'm not calling this a target by any means. I'm just sort of illustrating what I think is possible once or if we test that 57.84 channel top, rises to 58.27 in early February. Once we test it and the market backs off, we could fall back into the mid-30s over the following 3 to 5 weeks, a couple of months at the most. So there's that. But this is obviously a constructive market. This is a consolidation pattern in the midst of what could be a continued bull move that'll play out well into 2021. And your next signal is closing above 57.84, then anticipating 75.97, which, that's going to be, is that a 30%? Is that a 40% move? That's like, that's like 30% or more. I should do the math before I shoot these videos. I'll let you do the math, but it's a good move. If you were to catch most of it, it would be a nice, 20 to 30% move to the upside before assuming you might unload much of it in the 75, 76 area. So I'm just going to leave you with that. This is there's no signal in effect right now. You could play it both ways. Then I'll take one more minute to express that as we push into the upper 50s, 57.84 to 58.27, you could consider playing the short side, buying puts, selling stock, selling calls. Inversely, if we close above that 57.84, cover any short positions you might have, play the long side, buy, $75 calls with several months out, so you're not subject to time decay risk. I wouldn't buy a call that has 2 weeks left in it, although you might. If we got a nice blast to the upside, you'd see that thing go from a low price to a high priced option. So I'm not going to get too deep in the weeds there. I'll just leave you with this. We have a meaningful pivot point in the upper 50s, below which the mid 30s are attainable over the next month or two, and above which the mid 70s. It's about as simple as that. And that's all I've got for this particular Wicked Signal video on NIO, symbol NIO.